afternoon and happy Friday. It's Alyssa Corum and Ed Carson here with a look at the stock market today, reporting to you live from our newsroom in Los Angeles. And on today's show, we're going to be analyzing the charts of Lyft, a new issue out today, as well as Autohome, and taking a look at how growth stocks performed this week. But first, let's take a look at the major indexes. We finished up nicely across the board, with the NASDAQ and the Dow finishing up about 0.8% each, while the S&P 500 finished up 0.7%. So we finished the week on a positive note in a week that I think had been starting to raise some concerns. Yeah,
when you add it into along with last Friday's big sell-off, and even those little declines were really worrying people early on. But we, rallied today, weekly gains of 1% or more. I mean, it was, not the greatest thing. The market is still under pressure, at least that's our latest read. I mean, it's not tremendous pressure. It seems like growth stocks have been acting pretty well. Indexes once again having a little pullback. You see this along the way. If you look at it from this chart, and if we put on a weekly chart, you hardly notice that there was much of a pullback at all, which it has been a strong rally. The major averages are getting pretty close to those all-time highs. This is the NASDAQ. I think the S&P and Dow might be even closer. So, it's been going pretty well. It's nice to see the stocks rebound.
That's right. And you mentioned the strength of growth stocks, and we have the Innovator IBD 50 ETF outperforming, with the NASDAQ gaining about 1% this week. The FFTY gained a little over 2%. So growth stocks outperforming, and that's definitely something that we like to take a look at, especially when the market comes under pressure. Yeah,
I mean, we always talk about, if you want to know what the market's doing, you follow the leading stocks, as well as the major averages. And this is a way that's in the IBD 50. It's one good proxy, and there's others. Chip stocks, which had a tough week for much of the week, they rebounded nicely today. The 50 is back above its 200-day. That's just some positive action. It's not earth-shattering action, but it was a mildly positive week after having some jitters, a few days earlier.
Sure, exactly. And we want to take a look at an intraday chart of Lyft, which priced last night at 72 at the high end of its upwardly revised range, opening at 87.24, rising a little bit to just under 89, and then closing the day right around 78.29 here. So, it closed above where it priced, but still that intraday change, I think, just goes to show you why you do want those IPO bases to form before you get in.
Yeah, I mean, it's like basically anybody who bought it after after it debuted is on holding a loss. I mean, it's what it comes down to. I mean, it's sort of like, well, maybe it'll take off and maybe it'll keep going. Yeah, sometimes it does, but usually they form a pattern. I mean, it's sort of like saying, hey, there's a rookie quarterback. They've never played. Sure, every once in a while they'll go out and do great from day one, but they'll usually have a rocky start. Some will never come back. Like Snapchat, it had 2 good days. So even if Lyft had a good day today, that's not a sign to buy it.
Right.
You wait for a real buying opportunity. You don't know how it's going to shake out. It's a money-losing company. It's not clear where they're going to get a profit. Obviously, this could rebound. We don't know.
Yeah.
Maybe in a few weeks, this will be a great stock to look at, but right now you just stay away.
Exactly. You don't want to get caught in that trap. And for those who are chomping at the bit to get in on Lyft, it's one of the most highly anticipated IPOs that we've seen in a while. But IPO bases, unlike your traditional bases, which take quite a few weeks to form, IPO bases can be as short as about a week.
Yeah, I mean, usually we look for a few more days than that. It's like, and it could be a few weeks, could be a few months technically, but like the first ever real base, and we'll just see what develops, and that's again, you want the odds in your favor.
Yes, that's right. And you can bet we'll be keeping our eyes on Lyft, no doubt. And then we also want to take a look at a breakout out of a name from China today. Autohome finishing the day up about 14% in heavy volume, breaking out over a handle on renewed optimism over the trade talks with China. So this is just one way that investors could diversify their portfolio perhaps a little bit and get in on China with this optimism we're seeing.
Yeah, I mean, it was a nice breakout. I mean, it is interesting that Autohome, which is an auto information site, and auto sales have been really weak. But again, if you feel like the economy might pick up again with a China trade deal, they're doing some stimulus measures, maybe the economy down the road will pick up again. This is just, looks pretty strong. It's one of the first ones to really break out after a few sort of had some fitful attempts a few weeks ago.
That's right, and a lot of names out of China, starting from June 2018 pulled back pretty harshly, some selling off more than 50%. So the bases that they are forming, we wouldn't really consider actionable given how deep they are. But this space for Autohome, it's actually a cup with handle within a larger consolidation. And the buy point here being 96.25.
Yeah, I mean, it's obviously sometimes you don't want to be jumping into a specific company. You may not know it that well.
Sure.
I mean, especially when it's a foreign company. So there's definitely other ways to play it, like ETFs.
That's right. We're going to take a look at KWeb, the Crane Shares CSI China ETF, which rose 3% today. So as you mentioned, Ed, ETF's a great way to play a group that maybe you're not too certain about one individual name out of the group.
Yeah, and it's done well. I mean, it's still below its 200-day. It seems to be coming up on that. ETFs, you can play them like stocks, or you can just buy them more like a mutual fund. So it sort of depends on your strategy and just be thinking about it. But it's definitely a way to go at it because were a lot of names going up there today. The Shanghai Composite rose 3.2% today. A lot of China names went up, but again, not many were actionable. A lot of these deep bases, but you can ride it. And this is also a good way, even if you own a stock like Autohome, you say, well, wait a second, why is it down? Well, you can sometimes just punch in KWeb. Oh, I see.
Yeah.
They're all sort of down, just sort of like you see the market. I mean, the China stocks were rallying today, and that's a big reason why Autohome did, but obviously it did a little better than the rest of them.
Exactly, and as you alluded to, if this was an individual stocks chart, we wouldn't want to be touching it here, but because it is an ETF, you can play it a little differently, so we'll be keeping an eye on this space as well. All right, everyone, thank you for joining us today, and as you may have noticed, the charts that we are using are MarketSmith charts, and it just so happens to be MarketSmith Free Access Week from now until the 31st. So you can go to investors.com/MS free access for all the details to take advantage of all the great screening options and data that you get with MarketSmith.
That's right. I mean, it's really a great opportunity. Don't miss it out. You've got a couple more days left. Research a bunch of stocks this weekend using our tools.
Yeah.
It's really great.
All right. Thanks for joining us, everyone. And as always, be sure to head to investors.com for the latest stock market news and analysis. You can also check out our content across social media, whether it's on Facebook, Instagram, YouTube, or Twitter. Thanks again for joining us. We hope you have a great weekend, and we'll see you back here Monday.